Good morning, good afternoon, good evening, wherever you are watching from. This is Mem Tutu again on today's class. Remember, we are still on the same topic, stock or inventory valuation. To have a short recap, we looked at what is trading stock. We have also considered the key words that you need to know as a grade 12 student, considering the stock valuation. And then also we have looked at the two system, the perpetual inventory system and the periodic inventory system. The last episode, we were able to look at the first method used to calculate stock valuation when calculating your closing stock. The first method we looked at was first in, first out method. Please feel free to check the former episodes as we continue in today's episode. Now, for today, we are looking at the stock valuation, and then we are considering the second method of calculating the closing stock as well as the cost of sales using weighted average method. Weighted average method, what we normally call WAM. And now, when using the weighted average method, we need to first calculate the average price per unit. This method is mostly used for goods that are close in price. You find out that the cost price of this one is close to the other goods. You find out that these goods, they only have 1 rand or 50 cent differences. Then we can add up all those goods and then divide by the number of stock that is available. So the first thing you need to know when calculating your closing stock using the weighted average method, you need to know the average price per unit. And how do we calculate the average price per unit? We say the total value of stock available for sales. The total value of stock available for sales divided by the number of stock available for sales. The total value of stock available for sales divided by the number of stock available for sales. That will give you your average price per unit. And then once you get your average price per unit, then you can multiply that amount with the number of your closing stock for you to get your value of closing stock using the weighted average method. We also use the same amount, meaning we are using the same average price per unit to get our cost of sales. You multiply that amount with your number of goods sold to get your cost of sales, especially if the business is not using a periodic inventory system. Now, let's consider an example adapted from February-March 2017. February-March 2017. XY Sports Shop. Popo Shabalala is the owner of this business. The business uses periodic inventory system. Calculate the unit price of cricket ball on 1st July 2019. And then the second question says, calculate the value of closing stock on hand on 30 June 2020 using the weighted average method. Using the weighted average method. And then we have to calculate also the gross profit as well as the stock holding period. All right. Now let's look at our information. The information given unto us. We have information A talking about the stock of cricket bats, and then we have the opening stock as at 1st July 2019, as well as the closing stock, the value of the opening stock is 420, and then we have 350 stock there. And then we can see information B telling us of our purchases and returns, as well as carriage for the year. All right, we purchased some goods in September, another one in January, another goods were purchased in March, as well as June. We have returns from the purchase of June. 20 goods were returned from purchase of June. It means for June we are left with 430 units. All right, now let's talk about our carriage. The said carriage on purchases, total transport cost of stock purchase during the year is 110,400. No refund was received for carriage on returns. So it means for our returns, we are only going to get back the cost price of the goods that were returned, but carriage is not taken care of. All right. Now, the first question here says we should calculate the unit price of for cricket bats. I think it should be as at June 2020. Unit price for cricket bats as at June 2020. So in doing that, we are using our weighted average method. So let's use this to calculate. We said we need to get the total value of stock available for sales divided by the number of stock available for sales. So in doing that, I love to make my division sign readily available. And then I will start with my opening stock. The amount of my opening stock is 420,000, and 420,000 is for how many units? 350 units. I put 420,000 as my numerator and 350 units as my denominator. Then I go ahead and look for my total purchases. The value of my total purchases stands at 4,302,500, and the total number of goods purchased was 3,150. Also, I put my total purchase amount as my numerator, and then I put the number of my total purchase as my denominator. Then I go ahead and look for my returns. Yes, I have 20 returns, and the total value of my returns is what we need to calculate here. Let's calculate the total value of our returns. Our returns is from the month of June. Our returns is from the month of June, and then we said we return 20 units, and then we multiply that by the unit price for the month of June, which is 1,525, to get the total amount of our returns. So we say 20 times 1,525, and that should give me 30,500. So I'm going to minus the value of my returns, which is 30,500, and that makes me to take out the unit of my returns, which is 20. Then our carriage, we were told that the total carriage for the year is 110,400. So we can get our unit price. We can get our price, average price per unit. When we compute this, we get our average price per unit. 420 thousand plus 4,302,500 minus 30,500 and then plus 110,400, and that gives me the total of 4,802,400. Then I divide that by the available the units available for sales, which will be 350 plus 3,150 and minus my returns of 20, which will give me 3,480. So when I say 4,802,400 divided by 3,480, and that will give me a unit price, an average unit price of 1,380 rands. And that will be our answer for the first question. Now, the second question is saying we should now calculate the value of our closing stock. The value of closing stock. So the value of closing stock the value of closing stock will automatically be the number of closing stock. If you check the question, the number of our closing stock is 465. So 465 units multiplied by the price, the price per unit, the average price per unit, which is 1,380. Then you get the value of your closing stock. So I'm going to say 1,380 times 465, and that gives me the value of 641,700, and that is the value of my closing stock using the weighted average method. The value of my closing stock using the weighted average method. Now, the next question is asking us to calculate our gross profit. We are to calculate our gross profit. Remember, learners, that your gross profit is your sales minus your cost of sales. Your gross profit equals to sales minus cost of sales. We got this from our trading account. Looking at your income statement, your sales minus your cost of sales will give you your gross profit. So we need to know the value of our sales, and then we need to know the value of our cost of sales. If you check this question, the first line on this question says, Pope Shabalala is the owner of the business. This business uses periodic inventory system. Periodic inventory system. Now remember, using the periodic inventory system, if you go back to the first class that we had on the stock valuation, we looked at how we calculate the cost of sales using the periodic inventory system. So we are still going to use that same system in calculating our cost of sales, because we were told that this business uses they use the what periodic inventory system. So we need first to calculate our cost of sales. we need to calculate first our cost of sales. So I'm just going to calculate my cost of sales here. So the first thing I consider is my opening stock. The value of my opening stock, which is 420,000. I will add my net purchase. All right. Our net purchase will be 4 million. 4 million. Okay, let me rewrite this. I'll just say purchases. 4,302,500 minus our returns, which is 30,500. Our returns was 30,500. So when we compute that, we're going to have 4,302,500 minus 30,500, and that gives us a net purchase of 4,272,000 rand straight. Okay, and then after that, we consider our carriage. We have carriage. Our carriage stands at 110,000. I need to go back to the question. The carriage stands at 110,400. 110,400. Then we finally less our closing stock, which we still have on the board. That is 641,700. So when we compute all this, we get our cost of sales. You get your cost of sales. So let's compute our cost of sales. Cost of sales stands at 420. Excuse me. We have 420,000 plus 4,272,000 plus 110,400, and then minus 641,700, and that will give me the total cost of sales of 4,160,700. So definitely I got my cost of sales. My cost of sales from there is 4,160,700. So now I need to calculate my sales. Now, if you check your question, information C gives you the total sales. It says you have the total sales of 5,400,000. Our total sales stands at 5,400,000. Yeah, so we can easily get our gross profit. So our gross profit will be equals to 5,400,000 minus 4,160,700. So our gross profit is 1,239,300. There is your gross profit. All right. The next question asks us to calculate the stock holding period for the closing stock. stock holding period, your stock holding period for your closing stock will be equals to your closing stock, which is 641,700 over your cost of sales, which is 4,160,700 times 365 days. If you are looking for days, you use 365, but if you are looking for the month, then you use 12 months. All right, when we compute this, we have to get 641,700 divided by 4,160,700 times 365 days, and that gives me 56,3 days. And that is my stock holding period. It means the closing stock of this business will stay in the business for 56,3 days before we can sell it out. Now, you as an accountant, you are asked to calculate, to support this person's concern. So in doing that, we look at the cricket ball, the unit of the cricket ball we are supposed to have as the closing stock. If we, by calculation, if the unit is equal to our closing stock, then there is no room for concern. But if the unit you calculated as your closing stock is actually more than the actual closing stock given to you, then there is room for concern. It means some balls were missing. So let's go on and calculate the missing balls for this business. Missing cricket balls for this business. And in doing that, we are looking at the units. We are looking at the unit. All right. Now, the unit of our opening stock was 350. We had 350 at the beginning of the year. Then we purchased 3,150 stock during the year. And then we returned 20 stock. And then we sold 3,000 stock. So in doing this, we get the number of stock that we are supposed to have left in the business. All right. So we say 350 plus 3,150 minus 20 and minus 3,000. The number of units we are supposed to have in the business was supposed to be 480 units. But if you check your closing stock says we have 465 units left. It means this person's concern is valid. So how do we get our missing balls? Our missing balls will definitely be 480 units minus 465 units. So when you say 480 minus 465, that means 15 balls were missing. 15 balls were missing. So the concern of Pope is very, very valid. So how can Pope solve this problem? We are asked, how can you solve the problem of missing stock? How do you solve the problem of missing stock? Your advice should be Pope should count the stock regularly. The fact that Pope is using periodic system means that they don't count the stock regularly. So your advice should be that Pope should count the stock regularly. You should order for smaller quantities of balls so that he can be able to monitor the movement of the ball. Then also, Pope should increase on the security of the business. That is me for today. We have just looked at the weighted average method. Please feel free to check the other episode, and then also feel free to ask your relevant question. You can ask question using the YouTube page displayed on the screen, as well as the WhatsApp number given on the screen. See you in the next episode as we consider the third method of stock valuation, and that is specific identification method. Until then, bye.